Hey all, welcome to ShareTreck. This is Raj here. Today I'm going to talk about something which is more macroeconomic in nature and it could affect all our portfolios, especially foreigners who are investing in the US dollar in NASDAQ and other US stock exchanges, buying US stocks. So it will be of interest to them. It will also be of interest to expatriates who are living and working in the United States, earning in US dollars and probably sending money back to their home country where they are probably going to retire or relocate at the end of their career. So this will be very important for those. And the topic mainly is the status of US dollar as the reserve currency and how it is faring, the challenges, etc. So let's get started. Welcome back, friends. So there has been a whole lot of chatter about de-dollarization. That is a term I hear. I think that the US dollar is pretty strong. It is here to stay for a longer time. But definitely there are a lot of strains on the US dollar. So in this video, I'm going to talk about why the talk of de-dollarization is happening, what are the prospects for the US dollar, and who is the next runner-up in terms of reserve currency. What are the other things that are happening in order to replace the US dollar? So these are all the things that I'm going to talk about. I'll have a few charts, data charts here and there to add value to what I'm saying or to underpin what I'm saying. So first to begin with, the US dollar was initially pegged with the gold bars which were deposited by various countries. So it was a gold-backed currency. And later on, there was a Bretton Woods conference where they decided to remove the gold linkage with the US dollars. And people are now able to freely buy gold, and also US dollars were not backed with gold. But still, US dollar remained the world reserve currency because people were using US dollars for international trade. And there are many smaller countries which do not want to manage their own currency. They adopt US dollar and they are happy with it. So those are all the things that are happening. The advantage to the United States of US dollars being a reserve currency is that other countries buy US bonds and US gets to keep the money and grow its economy. Of course, US is paying interest, but it's seen as a safe haven. So more than the interest, it is the safety and stability that attracts them. And the next thing is that as all trades happen in US dollars, it's US denominated. What happens is that it gives United States a very clear visibility into trade channels, who is selling to whom and who is buying from whom. That's another big advantage for the United States by virtue of being a reserve currency. The third thing is managing inflation within the United States becomes much easier because US Federal Reserve can control the value of US currency using its control instruments, and as a result, imports can become expensive or cheap, and exports can become expensive or cheap. So those are all some of the advantages out there. And much earlier, there was an agreement to sell the Middle East oil, all denominated in US dollars. In other words, if you wanted to buy oil, you needed to have United States dollars, which meant that many currencies were converted into US dollar in order to purchase oil. This created an increase in demand for the US dollar, thereby strengthening the US dollar. And since more people want to buy the US dollar, the Federal Reserve can print more US dollars. So there's a whole lot of US dollars out in the circulation. So that's another advantage of being reserve currency, because all that purchasing power is now vested with the United States. So all these had happened. Now, since the United States has the currency reserve, and it's also the currency for international trade, what happens is that the United States is able to monitor and track each and every trade vertical, and as a result of which US got the great ability to impose sanctions. Sanctions are imposed not only on bank balances that are held in US dollars by foreign countries, but also sanctions are exercised on what one country can sell to another and what it can't, because all those sales are denominated in US dollars. So the United States has been typically weaponizing the sanctions regime in order to bring into control a lot of rogue regimes which do not follow the standard international protocol that every country has agreed into. And in those buckets comes North Korea and Russia and a few other countries. So the first part is sanctions. The second part is trade war, and because international trade is denominated in US dollar to a great extent, what happens is that the US is in a position to impose trade sanctions. So in the trade sanctions or in a trade tariff battle, United States is able to prevail. So all these things have caused a kind of backlash where other countries are trying to see if they can get out from under the US dollar control and meet their aspirations. So as a result of which, there are a lot of movements that have taken place. One of them is the cryptocurrency movement, where Bitcoin and Ethereum are the leading contenders to replace US dollars. And then we have gold, which is again a precious metal, which has underpinned the reserves for many countries. Of late, China is buying a whole lot of gold in order to diversify its foreign exchange reserves away from US dollars. I'm going to show you a chart out here. I've taken this chart from the RBC website, and it has got data until I think 2022. This is the most latest I could find. And as you can see, this blue line out here is the treasury yield, and it looks dominant out here, but our actual focus is on the yellow line, which shows US dollar as a percentage of global currency reserves held in US dollars. And you can see that it has steadily dropped. This 75%, 50% and all. This is what indicates the reserve currency status of US dollars. So we have seen that US dollar was accounting for almost 72 or 73% of global currency reserves. And since then, it has fallen down to somewhere around, I would say around 53 or 54% on this chart. So that's a big drop, a drop of around 20%. And we may wonder, okay, who has taken over this space? So I have got this chart for you again. Now in this chart, you will see that we have Euro, which is the next big one. It has got a share of 19.98. US dollar has got 58.41. And then there are these other currencies out here, which are not that significant. But it must be said that the European Union has failed to take over from US dollars. And one of the reasons is also because the European Union has a different philosophy, and their euro reflects that philosophy. So companies that want to do business in Europe, they need to follow a whole lot of regulations. And companies don't like regulations, so they generally try to stay out of it. Whereas in the United States, deregulation has been the currency whenever there have been conservative presidents, and democratic presidents bring in more regulations. So overall, if you look at the tug of war between the regulations and deregulations, I think in that area, US dollar is superior to euro. And on the other side, if you look at punitive punishments like sanctions and trade wars and tariffs, that's also costing US dollar a lot of its popularity, as a result of which the US dollar is becoming less and less of a global reserve currency. And we still have to see what is going to step in to take the place of US dollars, because that doesn't seem to be a viable alternative. As the BRICS currency, which is supposed to be consisting of Brazil, Iran, Brazil, India, China, Russia, those kind of countries getting together, and they added, I think, South Africa and a few other countries into it. But it has not actually taken off in real earnest. China is also trying to do something with cryptocurrency of its own. So we'll have to see how it goes. But overall, I think everything is going to depend on how reliable United States is. At present, the US stock market is the gold standard for world stock markets. There is a whole lot of volume and momentum out there in the US stock market. The number of listings, the value of the overall stock market and the indices, it's all tremendous. So the world gravitates towards the US. Many foreign companies have got ADRs, or American Depository Receipt listings, in order to tap the US stock market. So at present, that's a very big factor for United States. Also, the overall law and order situation in the US is much better. Democracy is much better in the United States. And the military is also very strong. So all these things are supporting the US dollar. But as the judicial system loses credibility, as the banking system loses credibility, and as the democracy comes under strain, all those things will be reflected in the popularity of the US dollar as a currency reserve. And also when the budget deficit keeps on increasing, that also puts a lot of pressure on the US dollar as a reserve currency, as well as a currency for international trade. So the US government has a lot of work to do if in the next election, whatever is the outcome will also determine that. Now, what is the implication of US dollar becoming less and less of an international reserve currency and a currency of trade? Well, what will happen is that foreigners will have to hedge their currency against the US dollar, so that if the US dollar falls, their US dollar denominated assets do not lose value. So that's the most important thing. And the other thing is that if you are an expat living in the United States and you are planning to go back to your home country at a later date for retirement, then you may want to diversify your assets out of the US dollar to a certain extent so that you can have a balance. Gold comes into play out there. You can use gold, you can use euro, use some other measures like that, or buy hedging products which allow you to hedge currency risks. So those are all the things that you can do. Well, friend, it was a longish economics kind of a video, but suffice to say that these are geopolitical risks to the US stock market as well, and to all the genomic companies that we are looking at in our watch list. So well, friends, that brings me to an end of this video today. I'll catch up with you again in the next video. Please do not hesitate to put your thoughts in the comment section. I love to read them. And please smash the like and the subscribe button and help us grow this channel and reach 20,000 subscribers. Thanks and have a great day. Bye for now.